Welcome to The Explainer. Today, we're going to try and make sense of what the financial markets are screaming at us. We'll look at the numbers that are, believe it or not, influencing everything from your grocery bill to the global balance of power. And we'll figure out what story they're really telling us right now. Okay, I get it. Looking at a screen like this can feel like trying to read a foreign language. It's just a wall of numbers, right? But trust me, hidden inside all this data are some absolutely fascinating stories about growth, risk, and, well, where our economy is headed. So let's break it down together. So here's how we're going to tackle this. We'll start with stocks, then jump into commodities, currencies, and bonds. And then at the end, we're going to connect all the dots to see what the big picture looks like. All right, let's dive right in with our first topic, stocks. You know, you can think of stocks as just tiny, tiny slices of ownership in a company. And when we look at how they're all doing together collectively, we get this really powerful signal about business confidence and the health of the entire economy. Now, obviously, nobody has time to track thousands of individual companies every single day. That is where indices come in. You can think of them like a market's greatest hits album. They just bundle together a whole group of stocks to give us a quick snapshot of how that entire group is doing. Super useful. And this is where a really interesting story starts to pop out, especially in the tech-heavy NASDAQ. I mean, look at this. Over the last 3 years, it shot up by almost 98%. But so far this year, it's actually down a couple of points. That huge contrast kind of suggests that the red-hot tech sector might finally be cooling off after an absolutely historic run. And this just highlights the wild daily drama of the market. On the exact same day, you can have these massive swings. Dell Technologies rocketed up almost 22%, while Duolingo dropped over 17%. It's a great reminder that under the surface of any big index, there are always some huge winners and some big losers. Okay, next up, commodities. Now, these are the fundamental raw materials that are literally the building blocks of our economy. Think of all the stuff we pull out of the ground to power our industries and build our world. Yep, we're talking about everything from gold and oil to the wheat that, ends up as bread on our tables. And because these goods are so essential, their prices give us this raw, unfiltered look at global supply and demand. And boy, can things get turbulent here. This chart just shows the price swings in a single month. Gold dipped a little bit, silver dropped a lot more, but just look at natural gas. It plummeted over 61%. That is a massive move, and it tells you there's a huge shift happening in the energy market. So here's the crucial point. These numbers aren't just for traders on Wall Street. That huge drop in natural gas prices, that could directly affect your heating bill this winter. The price of wheat, that affects how much you pay for a loaf of bread. These markets have a direct line right into our wallets. Okay, from raw materials, we're going to jump into the super fast-paced world of currencies, or Forex. This is actually the largest market in the entire world. It's a place where the value of one country's money is constantly being measured against another's. You know, the Forex rate is what makes global trade and travel even possible. It's the number that decides how much a car from Japan costs in America, or how far your money is going to stretch on that European vacation. It's really just a constant dance of values that reflects how strong a country's economy is. And when you look at the 3-year data, whoa, you see some major stories. You see the usual shifts between the euro and the dollar and the yen. But then you see something absolutely dramatic. The US dollar has strengthened against the Turkish lira by over 132%. A number like that isn't just a market blip. It's a massive economic event for an entire country. All right, our final piece of this big puzzle is bonds. And in the simplest terms, buying a government bond just means you're lending that government money. And in return, they promise to pay you back with interest. The key number to look at here is the yield. That's the return, the interest rate the government has to pay you for your loan. And you can think of it like this. It's kind of like a country's credit score. A really low yield means investors see that government as a super safe bet. A higher yield, well, that means investors are demanding a bigger payout to compensate for what they see as a higher risk. And this table gives us a really fascinating comparison. Right now, investors are demanding a higher interest rate to lend money to Canada for 10 years than they are for Germany, Japan, or China. And those little differences, they reflect the market's collective gut feeling about each country's future economic stability. So we've looked at stocks, we've looked at commodities, currencies, and bonds. Each one tells its own little story. But now, let's do the fun part. Let's zoom out and see what happens when we put all of these pieces together. So when we pull it all together, a few clear stories start to emerge. We're seeing a potential turning point for tech stocks after that huge boom. We're seeing some real instability in the raw materials that fuel our economy. We see very different levels of trust in major governments. And we see currencies telling these big tales of economic shifts. The big takeaway from all this is, well, we're in a moment of significant change. That long period of steady growth seems to be giving way to a much more complex and, frankly, uncertain world. It feels like the global economy is recalibrating. And all of that leaves us with the big question, right? What's next? These numbers, they aren't just a report card on the past. They're actively writing the future. The uncertainty and the volatility we're seeing today, those are the seeds of the world economy we're all going to be living in tomorrow.